as to the point as that that's all about selecting pairs. It is not complicated. You don't have to go to YouTube and start watching 30 minutes video, 1 hour video. You don't need any of that. Pick what resonates with you, what fits your trading style, what fits your personality from your personal experience. Start from trading a lot of pairs, understand them, then begin to shed. Cut them down until you have a concise list of trading pairs that you can know the price action by heart. Like now, Usdchf, I know Usdchf, the whole price action, at least for past months or past year, 2 years. I can recall what the price action is like. I can look for something in particular because I am familiar with the price action of that pair. So if something wants to repeat itself, I remember that this thing happened before, this was how I played out, and I know how to approach it from there. So, notwithstanding, we'll go straight into the breakdown for the month of May. That was where everything falls. The time on price, continuation setups, entries, buyers, etc. So now, I'm sure every one of us that trades key level, we are very familiar with the entire bias building technique that requires daily rejecting daily or weekly rejecting weekly, monthly rejecting monthly, all of that. We're very familiar with it. So now, there are other ways to build bias. There are so many other ways to build bias. Still using rejection. Rejection is one way. We have a way of building bias called closures. And it's as simple as it means. If the previous candle closes bearish, I expect the next candle to be bearish. That's it. There's nothing. If it closes bearish, I want to see H4 break to the downside. Once I see H4 break to the downside, I'll sell. I don't really care. You see this thing where somebody will have to start going to the back, looking for one rejection somewhere in 2019. I personally do not do any of that. So I come here, see bearish closure. Next thing I'm looking for another bearish candle. Except this bearish closure has a massive rejection. Then I can start considering okay, maybe it's rejecting up here. If I get a break, then I can continue. If I have something like this, no proper rejection or whatnot, I do not really care about where this candle here, where this wick here is rejecting from, all of that. It's not really my business. This closure is the most important thing to me. So closure is one way of building bias. Rejection is another way. Another way we can build a bias is from breakouts. We are all familiar with that. When I have something like this on the daily, if I have a breakout on the daily, I'm expecting price to continue buying to the upside. Because this breakout, whatever it is that propelled this breakout, this candle still has to close bullish at the end of the day. So when I have something like this, I still expect to buy. So this is one of the ways of another way of building back. So I'm saying all of this so that you are not restricted to the daily rejecting daily, weekly rejecting weekly. I know that's what everybody is very, very used to, but you should not be confined to those. You should not be confined to that particular gap. You should not be held in that tight space. You should have more things in your arsenal. So whenever it is you can find where price rejecting from, closure is your best friend. Bullish closure, bearish closure, that's very much it. And then your breakouts. So yeah, let's go right into the price action for the month of May. I want to keep this as short as possible so that it's very watchable for anybody who wants to watch it again, so you don't have to start going through 2 hours to our video. I hope my screen is visible. I hope everyone can see my screen clearly. Can everyone see my screen clearly, or do I have to change the?
Yes, I can see your screen.
Okay. The candles are also clear because I had issue with someone when I sent my chat. They said they could not see the candles clear. So everything clear, yeah?
Yeah.
Okay. Just use this. Okay, yeah, so this looks a lot more clear. Okay, now, so Usdchf. Oh, let's USD. This is my second favorite pair. So I talk about Usdchf a lot. So let's do USD. Usdchf. Let's show this. There's no time to finish too many pages. Okay, so now, month of May price action. What do we have here? Sorry. Okay, good. So now, for the month of May, this was April closing. This was what we had in April. April closed bearish. So now, like I talked about the closure thing and all of that, if this candle closed bearish, I'm expecting the next candle to be what? Bearish. This is what I'm expecting the next month. Bearish closure. That's all. I have my bearish projection in mind already. I don't have to start stressing myself. But what I want to use to validate that is what I want to validate it with a weekly break to the downside. As usual, the standard bias building technique. And as you can see on the line chart, we did get a weekly break to downside here. We got a weekly break to downside here. It tells us month of May, I expect price to sell. I expect price to be bullish. Yeah, good. So, got in my monthly bias. Next thing I want to do, next thing I did was mark my monthly target. Now, target number 1 will be what? The monthly low. Target number 2 will be what? This open close key level. Oh, these are first trouble areas. The first trouble areas are basically what do they call it in key levels? Obstacles, yes. They call them obstacles when you're trading key levels. Emperor BTC, someone who I started learning trading from, because anything that is stable of passing price from the original bias is called first trouble area. So you have first trouble area, second trouble area, third trouble area, as much as possible. So this is the first, this is second, and this is third. So we can use all these three as our possible sell targets. So now let's see. Now on the weekly, what did we have here? I assume that we are not beginner traders, so I will not have to start going through all the beginner stuff. Just you understand the bias, you understand structure. We'll talk more about all of that. Okay, so now this is our target. This is where we want to stop selling. We get any continuation, we sell towards here. We get more, we sell towards this point. So that was the idea. So now, weekly bias, what do we have here? Previous week closed what? It closed bearish. Huh? No. Previous week closed bullish actually. Previous week did close bullish. So now let's see what we have on the daily. Okay, daily gave us a break to the downside. Daily gave us a break to the downside. So monthly tells us that we're bearish. The weekly is telling us that we are bearish. Now for the daily, what do we have here? The last daily candle that closed what? Closed bullish. Seeing this here with this break, I really do not need anything on H4 to validate that the next day is going to down and price is going to be bearish for the next couple of days or whatever. So I do not need anything to tell me, or you can still check your H4. So check your H4, and as you can see, we did have H4 break here and H4 break here. So now we have something wrong. We have daily. Okay, hold on. Let me get something different. The text to yes. So we have monthly bearish. Okay, we have monthly to be bearish. We have weekly to be bearish, and we have daily to be bearish. Now that these 3 time frames have aligned, we have our target and everything marked out. What we now need is our entry. We want to sell to where? We want to sell to this bottom. This is our first target from the month. So now, first trading week of the day. So I'll show you how it is I approach the chart this particular day and every other day. Usdchf the month of May. So after this here, I was expecting price to sell to this point as usual. So now this is what happened. I do not trade during Asia. So the first two candles of your daily candle is your Asia session, is your Asian session. I want nothing to do with the market. A lot of people trade Asia and it works for them. It works for them good and fine. But personally, I do not trade Asia. I want to sleep around that time. So anything the market is doing is none of my business. So the first candle here, second candle, this is the 6 a.m. candle. This is when the 6 a.m. candle began. Hold on. Yes, so this is when the 6 a.m. candle began for Monday's price action. I was wrong trading. Okay, so yes, having this here now, I need a range to trade. I always trade with my ranges. If I don't have a range, I don't have a setup. No range, no setup. So that's my definition of an A+ setup. The setup does not have valid range. I rather just not engage in whatever it is that's happening here. On M30, you could see a lot of things happening here, like what liquidity being swept here, structure being broken here. And this would be our liquidity. This is what we'll be looking at as possible liquidity. But now, I like picture perfect ranges, to be frank. You can enter off of this directly and your invalidation will be okay. You would have been safe. But personally, I do not like trading things like this. I like seeing very, very clean ranges being created, something like this. Like seeing proper liquidity being swept and then structure group. I want it to be as textbook as possible. So this still works. This works very, very well. The expectation will be a retracement to this point, retracement to sweep this liquidity, and then we continue the cycle. But as you can see, what happened this particular day, I did not enter trade on Monday here because I rather not chase price. I genuinely do not like chasing price, and I like using confirmation entries on Mondays. So I was waiting for price to come to this point, but it did not. It came here, it broke down. Hold on. It came here, then it gave. Why is this not selected? Okay. Then it just kept breaking. It broke to the downside and went on. So I did not trade on Monday. And I would not trade something like this, genuinely speaking. I do not want to trade price action like this. So I'm approaching it the same. So for those who don't know how to properly backtest, I hope this clarifies that when I'm backtesting, I have a set of rules that I do not break. So how I'll approach the market in real time is how I'm going to approach the market now. I'm not trying to look for, okay, maybe I should have entered off of here or I would have done this. No, that was when I am trying to take note of things that happen in the market. But if I am backtesting price action based on my strategy and my entry models and all, I'm going to enter the market the exact way I would have entered in real time. And seeing something like this, I would have said, okay, maybe this is a sweep of liquidity and break of structure, but price did not give me any. It did not come to this point where I was expecting it to come to at least this point here. It never came to this point. So I have no business trying to sell this thing from here. For all I know, this could be another liquidity. The price come and sweep and done. So that was my thought process. And that was why I did not trade this particular day. So I think for the whole Monday, first day of the month, I did not trade. So let's move on from that. So Monday's price action was none of my business, so I let it be. Then let's go to Tuesday. Something interesting was happening on Tuesday. I always clear my chart at the end of every day, so I have a fresh start. So now this was Tuesday. We want to trade on Tuesday. Something interesting happened. We had a sweep of liquidity here. It came very, very close to this target, but it did not take this target. And at the same time, we had a rejection of this key level. So two things aligned. One other thing is that we closed bullish. So I was expecting at least we're going to have a retracement. Retracement to where? Remember, there are two phases in the market. There's the expansion phase and then there's the retracement phase. If you do not trade like that, I recommend that you actually take that as possible. There's the expansion and retracement phase. So know which phase you are trading. This helps with your targets, helps with your obstacle. If we were expanding, I would have targeted this high. But since we are retracing, I know that price is going to look for what first trouble areas to react off of. At the same time, we had this imbalance here. So this is a target probable area for price to react from. So what is interesting? What part of this entire imbalance is interesting? Things I can mark out this key level here. Why is this key level interesting? Because price sponsored buys and buys before it got disrespected. So this is the first place that I'll be looking at. Second place that I'll be looking at is where this open close key level here. Why price reacted off its key level 1, 2, before getting disrespected. These are the two closers, so I'm just going to leave them there as my possible targets. So now that we have that delineated, what I want to see is I want to see a break to the upside on H4, which will validate my retracement, my retracement trade. If I don't have any break on H4, then I do not have any trade. So my break can either happen the previous day or it can happen after Asia. I just want to see that break. It just has to form. I know some people, they have this problem where if they don't have the break on the previous day, the exact previous day, they don't enter the trade at all. That's good and fine. Being conservative is very, very nice. It is not bad. Personally, I don't really care. Once I see that break, I will enter. If I have everything aligning towards that position and I get my break, I'm going to enter the trade. So now, let's wait for Asia to finish one. So this is where Asia finished. We still did not have any break to the upside. Now, some people might try to sell this. Yeah. Remember, we wanted selling this position. Wanted selling this thing from here. That has not changed. Where are you? Sorry, give me a second. Fix this. Status line, save line. Okay, save charts, edge position. Yes, it's okay. Let's go back to the daily. Sort this out. Oh, these are targets. Still remember, that was our target. Let's get back to this. Yes, these are our two targets for daily. So I think I shared, okay, I did not drop this particular position, but here's what happened. When I have a retracement trade, I do not just approach it aggressively. I wait for price to do its thing. I wait for price to react. Once it has reacted and retraced, then find an entry to buy. Then I can find an entry for that particular setup. So now, if you recall, we had this place as price never got to this point. It does not mean it is invalid. You understand? But I'm not going to enter this thing aggressively. I'm going to hold it as my possible target. And see that place where we marked out on daily as first trouble area falls within this range. So now back to H4. Yes, we've not gotten to a place where I want to sell from, so I'm not selling. And we've not gotten a break to the upside, so I'm not buying. What do you do? I don't know. Please call it easy. Touch grass. You have no business in the chart at this point. Just cool off and allow price do its thing. And once you wait for the first candle to close, what happened? We then had a break to the upside. We then had this. Line chart, we had this. That was all I needed to know that now we are going to be bullish. Now we are certainly going to be. There's another way of figuring out something called swing point 1, 2, 3, but that's not important for now. Just focus on this. So we had this break to the upside. After the break to the upside, now we need entries for this break. And where I like finding my entries, I like finding my range M30, my range M30 or H1. Then I find something that aligns with my setup and I trade. So now this is what happened. Let's move this a little bit. I had this as my range here. Sweep up this liquidity and a break of this break of structure to this point. So this was my range. And I I said, once I have my range, I look for a key level within that range, and I basically take it as my entry. So one other thing that I need is I need liquidity. So at this point, there's no liquidity. If there's no liquidity, what I want to look for is I want to look for an imbalance. One of the two things that I like liquidity and imbalance. They help plug and play. I'm sure some of us know plug and play. Okay, somebody dropped a message about can everybody hear me? Can everyone hear me? Okay. Okay, so we had this imbalance here. I was hoping for price to come to this point and then I'll buy, but that did not happen. I had a missed entry here for this particular buy. So this was my idea. I took this key level here. Why price had used it before? Like I said, key levels that price have used before. That was basically my entry. Price has used that key level before. I'm going to use it. Even if I miss the entry, I'm good and fine. This is what I have. This was the candle that broke structure. So I was buying from here. I was aiming for 50% of these points. And don't worry, I'm not your mentor. I'm not teaching you any logic behind why I use 50%. I just use 50% because at least the price is going to go between stage 1 and stage 2 at least to get to this 50%. So I just hope. And Monday was missed entry. At least the buyer was a missed entry. So now we have gotten to here. We got to this sales. We got to this point where we had our range. So now I needed a reason to sell. And there's something to tell me that okay, we are going to switch structure from buys to sells. And what was going to do that H4 break to the downside? See, H4 break to the downside, but I like if I don't see H4 break to the downside, I'm not concerned about your swing point and what I prefer breaks. Give me the break. If not, I'm not entering the trade. So this is basically what sweep of liquidity, break of structure, and then what did we have again? Sweep of liquidity and break of structure. What does this tell us? This bullish range got to this point, and now we have started selling. It means this is over. Whatever buy that was happening here, following our overall buy. Remember, we're bearish, so you don't think that this is just random. Whatever, we've been bearish from the start. The price has gotten to our point of interest. After getting to our point of interest, what did we get? A break to the downside. I think I did not drop this on channel. I think I only shared it with some other. There's an image somewhere. But yeah, let's track this. Sorry, I'll just hide every single setup so that I'll be able to keep track. You'll be able to count the risk to reward, the misses and the losses. After figuring this out, I stopped trading multiple pairs, trading very, very few pairs. Reduces all the noise. So let's get back to this. So when price got to this point of interest, as you can see, we had a break to the downside. This is your confirmation entry. This is your confirmation entry. Immediately we had this break to the downside. I was ready to sell. I had two entries. I think I only shared the missed entry. I have two entries here. So I'll show you the first entry and I'll show you the continuation. So now after we had H4 break to the downside, this was the last candle that formed. What did I say after I see my H4? After I get my H4 structure, what I want to see is what range. I genuinely want to see a range. That range makes me more comfortable with the setup. I do not need to be afraid when it comes to my stop loss placement. Now we had this range. I need liquidity also. We had liquidity. Now we had this other block here. Now someone might ask, why am I using this other block as liquidity? There's something Udara talked about. For those who are familiar with Udara, he mentioned something about trapped order blocks. So they are basically order blocks that we expect people to buy from, but it's actually liquidity. People want to sell and buy from those order blocks. But in real sense, there's no reason why you should sell from it or buy from it. But keep in mind that the logic is that some people are actually selling from this point because it is another block. And what would they do? They'll take this as what? As liquidity here. this is the logic behind it. I like when my liquidity has logic behind it. It gives me more confidence in it. And that is why I took this level here as my liquidity. And my entry came from higher time. So now I want to use H1, H4, H2, whichever one best aligns. It's going to be my time frame for entry. And from the H4, we just had what? It supports that sponsored price action and got what? It got disrespected. Remember, key levels that have been used, they are my favorite. I will gladly use them over and over again. So we had this, my stop loss was there, above this high, just here. Somebody drop a message. Okay, yeah. So where was my target? The same place that we're aiming for. The same target here. Nothing changed. But instead of using this key level, I use this external here. I did not want stories that told you that. So you tell me price came, swept this thing, and then reversed. Okay, trading without follow. Don't worry, let me change this. Sorry. Okay, yeah. Try switching devices. Hopefully it works out. Hold on. Let's yeah, it's killing my eyes. Dark, gray, dark, dark, red and gray. I hope this works. So for Metis, I hope this helps with the color issue. Okay. So now we had this H4 break here. We had this H4 break to the downside, and that was my entry. My invalidation was up, and my take profit was this particular level where we were expecting price to go for. This is our monthly target here. So trading just USDCHF for this particular day, you have 8R. Straight, no brainer, no tight SL. You don't see me making my SL like this. We had plain 8R. So now let's walk through this as it played out with the confirmation entries and so on. So now after price tapped this, we had closure. I think that was the first day that price closed bearish. So now, as you can see here, this particular day closed what? It closed bearish. After price had retraced into this point, what happened? It closed bearish. When I see two candles like this that creates an Asian key level, there's something you don't have to talk about. I said something that I want to call to your attention. Calls it an FU candle. Yes, calls it an FU candle. Basically, we have a bullish candle followed by a bearish candle. It's basically, this is still a rejection to me. Once I see this, I still take it as a rejection. So this is basically a rejection of this level here. And then one important thing to notice is that this candle closed bearish. So after we have a bearish close on this day, what are we expecting? We're expecting price to push towards the direction that we've been hoping for all along. This is now our expansion trade. This is where you put your money, not you're trading retracements here and you're risking 10% of your portfolio. That stop loss will really break your heart. When you are trading expansion, when I'm trading expansions, I can go as much as 2.5% on my prop account. If I hit stop loss, and I'll focus on the pain later. But that TP on 2.5% it gives me very, very good, very, very good high. Please, that's not financial advice. Do not do it at home, school, or anywhere. So as I was saying, we had bearish closure on H4. We had this break to the downside. So now, I think someone mentioned not being able to catch setups after it has tapped the origin. After origin setups, they are not able to catch continuation setups. So now I'm going to show you something. This was the origin setup. Here, price coming to this point was our first setup. Now, I have missed this first setup. Yeah, good and fine, I've missed it. What then can I do? What more can I do at this particular moment? So what I do is I go down to lower time frame and still look for it. I look for other places where I can enter off of. And I'll show you all the places that you can possibly enter off of after this H4 candle close, rejecting this entry. So now we'll start from H1. Should show me lines. Am I supposed to line? Show lines is correct. So the one that rejected. Hold on. Let me check. Let's see 2 lines. Okay, yeah, this one is going. Let's get rid of this one for now. Back to H1. Okay, yeah. The continuation. This is a very general problem. A lot of you cannot catch continuation setup. So one of the reasons why people do not catch continuation setup is because of fear. You are afraid of hitting stop loss. That's the simple truth. But let's walk through that now. We have a range here: sweep of liquidity, break of structure, isn't it? We had the range that made us sell from this point here. Price has stopped. Yeah. I'm recording. So price has stopped this level. Now, in order for us to enter a continuation setup, personally, I need a range to form. I need another range to form. I'm not just jumping on any setup and hoping that it goes well. No, I need a range to form. And as you can see here, what happened? We had the sweep of liquidity. Was that the candle that swept? Okay, this was the sweep. Had the sweep of this high here. And what happened after that sweep of liquidity? We had a break of structure. Yeah. Now we have a range. That's all. Once I see a range, I can continue that setup. I can trade it longer. I can find something else. Select it. Yes. So having this in mind, I can look for something else that I will use to enter this trade. And what is interesting here? Something very, very interesting on H2 that appeared. I'm going to show you. Check the pinned message. If you do not know what I'm talking about when I mention this particular entry, please check the pinned message. Go as far as October. You are going to see where I explained this. I talked about it. So now this here is my point of interest. Why? This is an OCL that got disrespected both ways. So if I want to use a bullish scenario, let's say I want to see what a bullish open close key level that was broken to the downside and then broken to the upside. That key level, I don't care about your A shape or your B shape or whatever is close to it. This is where I'm going to enter directly off. So we had this on the H2, and that was why I marked it out. I think I sent it to some of my friends, and this is your continuation setup using range. Stop loss above the this is the impulsive candle. So I just want my stop loss to be above the level that was swept, or you can still do this. This is your choice. This is where price, you don't expect price to go below here, and leave it here. Good enough. If you want very, very sniper entry with tight stop loss, that works. But make sure that you do not get invalidated on a good trade. Don't make your stop loss tight because you want tight R. You want very, very large R when you end up missing out on a good trade or being. So this was the second setup. This was 9R. So let's hide this. So for those that do not understand continuations, I want you to pay attention. Look at the structure. Check your line chart. See something that was happening. Oh, hold on. Line blank. Huh? Hold on. One second. Okay, good. Now, if you take a look at the line charts, you can see market structure clearly shifting. Break. This is bearish price action. This is bearish price action. It's telling you that sales are in play. Follow the break. Follow the breakouts. That's the one thing. One tip that I'm going to give. So we had a second setup from here. Now take a look at what happened again. This led to what? Sweep of this liquidity and a break of what? A break of this structure here. Another range created. And you see how this particular trade gave us three setups. Now that we have this break to the downside, what point of interest can I use? I'm not going to aim for this extremity. Why am I not aiming for this extremity? Price has already given me one good setup, another good setup. It wants to do anything in its power to dump. It does not really want to go back to that point. It wants to do anything in its power to dump. So the closest and best entry you can get in on that position and leave the market. But this is Asian session, so we're going to take this from the daily again, because we are not going to trade that particular price action. We're not trading that from what do you call it? We're not trading it from the hold on. Let me clear this. So now after this day closed, bearish. Let's see Asia. I think Asia the next day. For those who want to follow buyers and all, see this is your H4 break to downside, H4 break to downside. I don't really follow. Once I get my directional buyers and I have my projections, I don't really go back looking for breaks. I just expand with price. So now I told you I don't trade Asia. So this was the end of Asia. Asia ended where? How do I say I missed this entire price action here? It's advisable that you backtest the days that you miss back. Start trading from there, start backtesting from there till you get to current day. That gives you more insight what price is doing at the moment. Hold on. Like orange, this sweep here, followed by what? Followed by this break of structure. So yeah, so we had sweep and break. Now, where could I enter off of? Where could I have entered off? Had one, but it's missed entry. Okay, good. Yes. So now we had this particular structure here. The idea is this is liquidity. This is the simple truth. Liquidity here. This was the closest key level to it. I wanted to just play off of this. And as you can see, we had the missed entry. This is another continuation setup, but this one actually missed. It did not get to where it did not. Swept its liquidity and started selling. I think I dropped this as a missed entry on the channel. Let's hide this too. So this was the last thing that price did before it eventually dumped to where profit. Once price hits this thing here, hits my profit, it's trading again. I do not care whatever setup it is that is playing. I just leave the entire thing and wait for the next day to show me something else. If it wants to continue, then I'll continue with the setup. If it does not show me signs of continuation, I'll wait for the reversal. It's clear with this. I'll move this here. So now, after this candle hits this our target for the first time, we see how bearish closure, bearish. We are more than happy to keep selling. We are very, very happy to continue to sell. Now, where do I want to sell to? I want to sell to this point. This is the next liquidity here. Remember, we had targets down here, all these things. We want price to take it. But price will not just go from here to here. One go take profit. So, because price stops here. When you're backtesting, approach the market how you would on a normal. Go approach the market how you would have approached it, and then learn from those mistakes, make your corrections. Don't try to fit everything. Learn from the mistakes after you have made the mistakes. So this was my target. Because price has taken this one. This is off the table. Now, that target was off the table. We closed bearish. We had bearish break. What was I looking for next? That I would use to continue myself. Let's see. So on H4, this was my, we had H4 break to downside. here. Remember, I don't trade Asia, so see all these candles here, none of my, this first candle, none of my business. Second candle for the day, none of my business. Once the third candle starts, this is where I come to the market. This is where I begin to find something reasonable that I can use to trade. So now, taking this into account, we had this break to the downside. I need a range to trade. I need a range to trade. This was the range, the only range that price presented. This was the only range. We had sweep of this liquidity here. But as you can see, price had not gotten to this point. Price has to break this structure in order for me to validate a range. It has to happen. But since we've not gotten to this point, what is the other range that has actually formed? Here. Sweep of this liquidity. Remember, this was the last place where we missed, where we had a missed entry. Sweep of this liquidity. Okay, no problem. Liquidity, which was followed by break of this particular structure here. So this is my range. So I want to trade within this point. So where's my liquidity now? This has become my liquidity. So once the price gets to this point, I have no business trying to sell. You see, this is where we stopped up. This is where we marked as when we came to the market. Now somebody might be trying to sell from here, trying this. You might try this and it will go well, but 9 out of 10 you hit stop loss. So I do not recommend. Okay, so I do not recommend you doing something like that. Follow range. Range is king. Range is always king. So liquidity breakout structure, we had this liquidity here. This pullback is where I expect price to react. But as you can see, throughout this day, we had no setup. Price did not come towards that level. Had my limits around here. I think my entry was for H2. Price did not come for it. And one thing that I do is whenever it is price goes to my peak profit before it gets to my entry, I just leave the trade. I don't try to enter it again. So this was my entry here. And I picked this because what? See how many sponsored this, came here, sponsored this, liquidity was overlapping. So I had a sell limit here. Stop loss was very, very close to this high. Target was still the very bottom. Targets in this place here. But as you can see, price did not come to this entry on this particular day, so I did not trade. By the this candle close around here, I deleted my limit order. So after deleting your limit order, you go back to the daily again, start afresh. What has daily to offer? Delete your daily, delete everything, clear your charts, but remember it. And now, something interesting happened here. We had sweep of this liquidity and daily closed bullish. Sweep of this liquidity, daily closed bullish. Now, we know that if this thing actually buys, where could it possibly stop first? See this V-shaped level here. Why? See how it sponsored price action, go disrespected. Price come back to this point and react. But let's validate that with the H4 break. Do we have a H4 break to validate this particular setup? Yes, we did.
What's going on, Dr.Drey? Hello, are you still on the live?
Oh, can you see my screen?
Yes, I can see it
Okay.
now.
How long have I been? How long have I been muted?
It's been like 1 minute now.
1 minute. Okay. I've been talking to you. So whenever it is you experience something like that, just call my attention to it. So that one, because I'm not aware at all. Thank you.
We do.
Yeah. So like I was saying we had this point of interest where we wanted to sell from the beginning, but we canceled our limit order. We wanted price to get there the next day and all of that. So as you can see, this is the end of Asia, 6 a.m. Now price has gotten to that point of interest. Is there any confirmation entry to sell? Because remember, I deleted my limit order, so I cannot categorize that one as a trade that I entered. So I need a confirmation entry before I continue selling. What happened here? I had the range. Sweep of liquidity, break of structure. I was planning on entering of this key level here. This was my entry. This is a confirmation entry. And I was targeting same low here. This was my first target, external range liquidity, and then this was my overall target here. But as you can see, price never got to my entry. This trade was not mitigated. Price did not get that close. So this was a missed entry. So for this particular day, I had no trade. I was not interested in catching this thing that was happening here because this was not a range. This here was not a sweep of anything, so I could not start entering off of this place. That was my range. So I was not interested in any of that. Now to the next day. Again, normal routine. Clear my chart and do what? Define. Move the line. Select it. Okay, yeah, good. So now, something happened here. This particular day closed what? It closed bullish. And we want to sell. We had a break to the downside. I want to sell this thing. This candle that closed bullish, I'm expecting the next candle to do what? I'm expecting the next candle to just come here, smash this thing and give me another break. But I'm not the market maker. I do not control the market. So I have to wait for it to form before I enter. So we had daily closing bullish. I have no business with daily closing bullish. I just want to see red. Once I see red, I find my way to enter. And now see what happened. We had daily closing bullish. We then had a break to the upside. After this break to the upside, this is it. This is an information, or what do they call it? This is a hint that price might come for what? Might come for this your entry. This place where we had this thing before. So if you had entered risk entry from here, your aggressive entry from here, this would be your sign to what? Close the trade. Because this is counter. Price wants to reverse. And there's no room here for reversal. It means this is probably what? Probable liquidity. What do? You just close your trade or you break even in case price never gets to that point. So this particular day, I had no trade. I did not try to buy this thing. I did not try to buy it at all. So let's see what day of the week is this. This is Tuesday. This is even another week. So I started this week being bearish. I wanted to sell this thing to the bottom here. But price had other plans. So moving forward, now look at something that happened on the daily. We had a daily break to the upside. Now, when you turn on your line charts, you're going to see something, a sweep of liquidity, a break of structure. This tells you that a strong level has formed. Price wants to give you a deep retracement. It wants to give you what? It wants to give you a deep retracement. We've had a break to the upside. Two bullish bearish candles closing today. Bullish bearish candles. So now, what do I want to do? My bias has flipped. I'm not marrying the sell bias. If you've heard me say something about not marrying bias and all that, this is what I mean. Do not get overly attached to the bias. Learn to be dynamic, be flexible. If the bias changes, change along with it. Don't just stick to one particular thing and say, if it does not do this, hell, nothing is going to happen. This is what the market must do. We do not control it. So after we had this break to the upside, we check H4 if we had another break to the upside on H4 that will validate this bullish price action, and we did. We had this here. So we know that what we are bullish, but we're not just going to start trading. We wait for what? We wait for H4 to wait for Asia, to close. So 1, 2, so this was the end of Asia. Now, how will we find an entry from this? This was the end of Asia. This candle came here and swept this liquidity here. This is something that I think we've talked about this before. Not I think, we have talked about it before. It's a form of confirmation entry. When a low has been swept and the high is standing, this serves as internal and external liquidity. We're expecting price to do what? Price to go to the high after it takes what? After it takes the low. But let's focus on something else. Let's focus on other things. Our range. See, I've consistently used range every single time. I have not stopped using range. From the very beginning, I started using range. Till now, I'm still using range. So, if it works for me, I think it should work for you too. And this is my range. Sweep of liquidity. This is the break-up structure. Now, this was my liquidity here. This was my liquidity. And as you can see, Asia did what? Asia swept this liquidity. So what I'm looking for now is what? I'm looking for a confirmation entry. Nothing more. From M30, I'm looking for what? I'm looking for a confirmation entry. Okay, Asia session. Asia session is from daily. I just take midnight. I will be very, very frank. I do not check the time. You see these first two candles on H4? That's my Asia. I'll explain it to you. Let's see, this is the start. Let's start from the daily, so I'll show you properly. Start with most recent price action. This is the most recent price action. Yeah. Hold on. This is most recent price action. So if I want to check for Asia, what I do is I wait for the first two candles for that particular day to form. From 22 to where 22 first candle form, nothing. I have no business with the market. Then the next candle from 2 a.m. candle starts forming. I have no business. Once this 2 a.m. candle closes, that is when I want to engage in the market, and that was when. That was by 6 a.m. So Asia is basically these two candles, first two candles of the day. That's your Asia session. That's 22 to 5 a.m. So I hope that clarified some of what. So moving forward, I had my range, I had everything in place. Now we need an entry. This was a missed entry also. We need an entry for this particular setup. Because this candle here came, take this as what? We'll take this as a sweep, this liquidity here, and we had a break of structure here. Had a break of structure here. Personally, I like seeing this on the line chart. I like seeing it on the line chart. This is my confirmation entry. I use the line chart for this type of confirmation entry. I sweep and break my range and everything. I want to see it on the line chart. So after I got this was instant. I did not have to start bothering myself that, okay, maybe because someone might tell you that this is Asian low, this is liquidity, price is going to come back to sweep it. But I do not have to worry about that thought process again. Why? Price has given me a confirmation entry here, which might fail. Keep that in mind. It might fail 100%. But I trust the system. It has worked more times than it has failed. So it has worked for me. I'll still stick to it. So this was the level I was expecting to continue the buys from, but as you can see, I'll show you the entry I had. I entered directly up to that level. Not market price. Entered limit order, but price expanded without me, leading to what? A missed entry. Yeah. Stop loss was below this level. Stop loss was below here. Where I was planning to buy to was this here. It's liquidity actually here. Yeah, 3.4. This is where I was planning to buy. See how the buyers changed from what? Changed from sales to buy. We are adapting to whatever it is the market is doing at the moment. And the reason why I chose this point is where this key level here was the main reason why, in case price wants to reverse and it chooses this key level, I want to be out of this trade, happily out of this trade before any bad thing begins to happen in the market. So this was a missed entry. I'll hide this and we will move on. This was 10. Now, after I have a missed entry, what I do is I wait for H4 candle to close. This is for those who still have the continuation setup thing. H4 candle has to close. I like seeing H4 candle closing. Once I miss a setup, I wait for H4 candle to close. Once it closes, I find something else that I can enter off of. So now, after this particular H4 candle close now, I look for something else that I can enter this trade off of. What is that? Look for at least a range or something. But now, as you can see, no proper range formed here. This was a sweep of liquidity. This was what sweep of liquidity from the previous H4 candle, but there was no break of structure. Look at this. I like seeing my break of structure M30, but if I don't see on M30, sometimes I can compromise M15. I do not recommend it. It leads to stop loss. So if I don't see on M15 also, then I say, okay, you wait for the range to form. If the range is not going to form, you know that that bottom is going to be what? Going to become your liquidity. That place that is supposed to form your strong level ends up becoming what? Ends up becoming liquidity. And that was what led to the idea of this range expanding to what? This sweep of liquidity and what? Break of structure. So since price could not create any other range for me to expand off of, I'm taking this particular range as what? As liquidity, because it has not yet formed. I look for a range that has completely formed. That's what I use for my trades. So this is my sweep of liquidity. This is my liquidity here. This is the top, and price did not get to this point this particular day, so I deleted my limit order. I'll show you all of that in a second. So something on the chart again. Now back to buyers and all. We had bullish what? We had bullish closure here. Now I'm expecting to what? Still buy. Buy to where? At least this key level here. This is since we are, you know that this buy that we're buying now, they are counter trend. We've established that we are bearish right from the start. So I don't want to start buying to the very top in case price is not get there. I want to keep my take profit as tight as possible, in and out as many times as possible. So this is my target. H4, we had bullish closure, so now we are expecting bullish break. And did we get that bullish break? Yes, this was the last bullish break that happened within that same day. So now that we have this, I know that we are bullish. We have our range here, super liquidity break and structure. Check the line chart, see how clear it is here in the line chart. So liquidity is what this. From merely looking at this from daily, now I'm approaching the chart as somebody that has not seen that M30 structure. This is me approaching the chart for the first time this particular day. Now, why would I take this as liquidity? This is a single candle liquidity. If price attacks a high, it is more than likely coming for what? Coming for the low. It happens a lot. Now that price has attacked this high, closed bearish, the next candle closed bearish, we know that it's coming for it, coming for this low. And something also interesting about this level is what? It's imbalance here. Now we have a range, we have liquidity, we have an imbalance. We need a key level that overlaps with what? This imbalance. That's going to be my entry. And as you can see, this key level here, V-shaped key level, has sponsored price action 1, 2, 3, 4, 5 got disrespected. Now it is fresh. This is my entry. Remember, we only saw this afterwards. 1, 2. So we are not entering from Asia. After Asia, we now what? That was when we found this entry. That was when we found this. My stop loss can be below the candle that broke price to the upside. So this is where hope my screen has not stopped sharing. Okay, my screen is still on. Okay. So this is the setup after Asia. If you pay attention to everything, all my entry model is the same thing: range, imbalance, liquidity. your problem is probably just what patience. Wait for it to form. This is just USDCHF. I've not talked about EU or GU. If you are trying to fathom the number of setups that you can get from this, just waiting for your setup to form instead of chasing every single move that happens in the market. So hold on. Yes, liquidity imbalance, entry, take profit. That was all for this particular trade. I have no other business with it. But let's say I missed the original setup and price has now tapped my entry and this candle closed. Where could I possibly enter off of again? Confirmation entry. Continuation setup. What do you do? Like I said, range. I look for something on the lower time frame, or I look for a range. Now, what can we have on the? What can we see here on the lower time? Good, very very interesting. I think I shared this. I shared this particular entry with everyone here. So this was what we had. We had sweep of this liquidity and what a break of this structure here. What was it? What was I even using? I think I used line chart. Yes, it was a line chart. We had sweep of this and break. Like I said, I use line chart when I'm dealing with continuation setups or confirmation entries. I don't necessarily need the range to be complete on M30 as your candlestick chart and whatnot. So if line chart gives me the sweep and break, I go with it. If the candlestick gives me sweep and break, I also go with it. So this is what I was using here. Sweep of this level here, break of this structure here. You have this break on it. Okay, can everyone hear me? Okay, yes, and it keeps breaking. Or hopefully it just hangs on to. Okay, yeah, as I was saying. So now we have sweep of liquidity and a break of structure. Where is my entry? Where is my entry? Very, very interesting. Now, can you see how we had this high here? The same thing we talked about before, about that single candle liquidity. This high has been taken. Where is price more than likely going for next? The low. It's that straightforward. There's nothing to start thinking about rocket science. It's that straightforward. Now, some people might think of what this QM here, which is very, very good. Some people were thinking of this level here, which is still very, very good. I have no problem with that. But one thing that happened here was that what this candle here already came to this QM. It already mitigated this level. It came and already tapped this one. Once I have something like this, the price has already mitigated the close point of interest for me. I don't start looking for a key level to enter off of. I enter directly off of liquidity. I think some people had their entry around here. Yes, some people had their entry around here, and some people had here, and so on and so forth. Some people were even waiting 50% from here to here. But my entry was directly at this liquidity. Why? Price had already done everything it wanted to do. This was just price continuing, and I don't mind getting in at a fair price. You understand? Some people wanted to just snipe, and I do not build the sniper entry. I do not. How do I say it? I do not make it happen on my own way sometimes. Sometimes it just happens on its own. Like this setup, this was how it happened. I chose to pick the liquidity as my entry this particular time instead of a key level because there was no direct key level close to this thing. This was just a white candle, so I was not expecting any serious retracement. My entry was here. My stop loss, not at this point. I did not do something like this, and I did not do something like this either. So it's roughly below this point because this is the level that price went. So, talked about entries, we talked about bias, invalidation, all these things. Take profits where? Still here. What is this? So if you're entering from risk entry, you have 4.2R. The confirmation entry, you have what? 6.6R. Even if you want to put your stop loss below here, be very, very conservative, no problem. What do you have here? You have 5R. So let's hide this and hide this also. So after this, let's say you're considering a continuation, you miss this one, you want to continue this trade. What do you have here? You have another what? You have another range. You sweep of this liquidity here, and a break of structure here. So looking at this, I would be expecting price to come at least to this level here. Why? Because we have so many weeks, and I want to take this week as liquidity. I'll be very, very honest about this. This is what I'll be looking for. Price coming to this level. But as you can see, we did not get that. Stop loss will be there below this point here. This is how I enter all my trades. If it miss, good and fine. I'll look for another one. But if it does not miss, huge banger, take my TP and I move along. So it's not simple. I'll not lie. It's not simple. If you've not done it like this before, if you've not looked at the chart like this before, in live charts, you are going to have issues. So that's where backtesting comes in. The same way I'm backtesting this thing, the same way I would enter on the live account, live chart, and all. That is the exact thing you should do. Don't try to have straight TP, straight TP, straight TP, straight TP, straight TP. So that's the end of this particular day. See, next day, brand new chart, clear every single thing. Except you have a running setup. Even if you have a running setup, hide it. Hide it completely. Nobody wants to see the running setup. So yeah, this is what do you call it? We had a break of this level here where we are expecting price to do what? React from price, did not react from it. Price went ahead to take the entire thing, took it high to the very top. Oh, start from here. Yes, so now we had bullish closure and see what price did. Price came here, reacted off of this. So this is not the rejection. I want to see a clean rejection. But let's see. If H4 gives us a break to the downside, I promise you I will sell. But if H4 does not give us that break to the downside, I have no business selling. And as you can see, by the end of Asia, like I said before, I do not trade Asia. I wait for Asia to finish before I enter. So one, can do one, you can do what? Can do one, can do two. That was the end of Asia. Now I have to look for a setup. First thing that I do is what? My target. My precious target. That's the first thing that I look for. And what could I use as my target here? Now we have this inverted fair value gap. We have this IFVG. Price could react from there. That's what I use as my target. Anything that could reverse price. I don't want it to be that, if I had known, I would have, let me take profit and leave. Except it's external range and price does not get there. I'm fine. But yeah, so this is my target. Another target that I could keep is here. Yeah. It's another target. These are possible places that could reverse price. Even this key level here. But I want to see what they do after Asia. I want to see how they react after Asia. Now, first trouble area here. As you can see, price disrespected it. H4 closed during Asia. So I have no business with this one anymore. Second one, after we've not gotten the Asia close. So this could still be what? Could still be our target. I don't need to. Yeah, this could still be our target. So yes. So yes, this is the end of Asia. This particular candle here. Now we want to trade from this point. We just came to the market and we made the market here. How do you approach the market when you have bullish? You have candles like this. I'll give you one tip. When you have candles like this on H4 and you're looking for how to trade, first thing, mark out all the interesting things about that chart, like what? Fair value gap. If you do not have fair value gap, that's good. First, when there's no fair value gap in a structure like this, what do you mark out? Mark out the week of the previous candle. These things this week, mark them out. These are very, very interesting point of interest that you could look forward to using. And if you mark your what do you call it? Your imbalance, look for a key level that has sponsor price action and overlaps with that key level, or the closest key level to it. Look for something like this. Mark it out. Just wait and see what price does around that level. So yes, like I said, mark OCLs, mark your OCLs, all those things. OCLs, imbalance, mark all of them. So now this is the first thing I marked. Then this imbalance and this particular week here. And what I want to see is a range on the lower time frame that supports that. Wow, this is a lot. Where was that? Hold on. Too much data. Okay, where are we? Delete this. Delete all this. Too much noise. Okay, good. So this is, let's clear up this. We're done with this price action. This is where we are looking at first. This imbalance, this what do you call it? This OCL here. And the next place we are looking at is what? This imbalance. Very, very good points that we could look at. And where's our target? This high here. So I'm not aiming for this yet. This is the first thing that I'm aiming for. So next up, I go to the lower time frame and look for something interesting, such as my range. Yeah. Okay, good. So now a range did form. You understand? We did get a range. And where will that range form? Will that happen? I want to make sure that we are focusing on the proper time. Let it not be mixed. Yes, this is when I came to the chart 16. This was very, very hot stop loss. So I'll explain what happened here. So now, like I said, I like seeing sweeps and I like seeing breaks. And what we had here was what took this as price sweeping this liquidity here and giving us a break to this level. Now, where would I enter off of for this particular trade? Where would I enter off of? I went back to my higher time frame. You see this OCL? When you have these bearish candles or bullish candles printing like that, it is your best friend. Do not sleep on it. Please do anything but sleep on it. Hold on to those key levels. It will help you with your entries a lot. So now I had my range, and this was my point of interest. This OCL here. Because I see this thing in loss where price prints bullish candle, prints, and then comes back to react off of this OCL. So if I find a reason to enter off of this OCL, I take it as my entry directly without second guessing. If it fails, it fails. I eat the loss and I move on to another setup. So now, as you can see, this is where I wanted taking my entry from. That is where I took my entry from, not wanted. So let's set that up. As you can see, this is an extremity. So what this told me was that this was probable liquidity. This place that price came back to. That's what I was thinking when I saw that it was in between the imbalance. If you have an imbalance, try paying attention to the imbalance. It helps. Don't be like me. Or be like me when I check out for the imbalance. So this was my entry. I entered here directly off of the liquidity because it overlapped with what? The OCL. My stop loss was here. No logical reason, just new price. Price comes, first imbalance, by second imbalance, it should be tired of moving already. It should pump my way. Then my take profit was, I messed up my values. So it was a bit above this thing here. Not that far. It's very, 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 hold on. Yes, it was like this. As you can see, this did not go to take profit. Yes, this did not go to take profit at all. Wait, why did it not trigger my take profit? I had take profit around here, somewhere around here, but it did not trigger. No idea why. And as you can see, price came to take the stop loss. Or if you had your take profit at this first trouble area where we are aiming at, price did fill your order. What happened? You were in and out of this trade before price came to do what? Price reversed. So that was another setup that played out for that particular range. After one setup on a pair for a day, I basically just park. I leave it. I don't try to catch more, except it has not gotten to my target yet. Once it gets to my target, I'm very much done for the day. Yeah. So next, I move to the next day, 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 move to the next day. Okay, we're almost done with this. So that price come into this imbalance here. It did not really do anything. There was nothing that I would call a proper rejection or not to say hope to buy to where next. This key, the end of this imbalance here. This place here. This is where I aim to stop my buys before I continue again. And let's see, H4, we had a break to the upside to validate that. we had this break here. Now I waited for, actually I did not wait for Asia to close. This was my poor decision. I broke my rule and I hit stop loss for it. We had this break to the upside. I was like, nah, price is just going to buy. Why am I trying to follow a rule that I created for myself? Let me just play this thing. Let me be very smart about it. When I sleep, I'll just wake up to my order triggered and hopefully towards TP. Little did I know what was ahead of me. Where did I just delineate? Okay, sure. Hold on a second, I'm testing. Okay, yes, good. So I had this marked out. This was roughly a break. It's very, very choppy. But my idea then was that this is what we are going to do. Since price came here, gave a sweep of liquidity, sweep of this liquidity, a break of this structure on the line chart, to be safe to play off this level here. It was lit. So we play it off of this key level here, off of this liquidity here. And yes, it's a point. And now this stop loss will be, it wasn't that low. Very close to it, but not exactly at it. It was like 5 hours. Yeah, 5.3. So this was my idea. I'll do something like this. I'll be smart, very, very smart. We have sweep here, break here, now range, everything that I trade. But I broke rule number 1, I'll be rule number 2, whatever number it is, falls under my rule is do not trade USD pairs during Asia. Instead, I set my limit and I went to bed and woke up to stop loss. So time and price. This is not all there is time and price, but it is most of what you need time and price. So I hit stop loss in this position. Yes, so if we had waited for Asia, we would have seen all of this happen. But waited for Asia to close, we would have seen most of this rubbish happen before we get in on the position, but that was not the case. But then after the 6 a.m. candle, what happened? We had a break to the downside. Now, remember that this is where we marked out as a point of interest for price to what reverse from, and then we had what a break to the downside. So now I can start telling myself that what, yes, we are about to start reversing. This is good. We saw this liquidity came here. Bias has changed. My first target would be what anything that looks like liquidity here. Number 1. Target number 1, overall target to be where this low here. Remember, we started the month. I've not forgotten the monthly bias. That did not change. And if you notice, I'm not checking the weekly. This is by design. It's not something that you kill yourself about anytime when you're back there saying flow with what the market is giving you at that moment. Flow with everything and see how you do. So back to this, we had a break to the downside, and my thought was now we have gotten what a sweep of liquidity, break of structure. We are about to start what selling. So let's look for an entry. This was my entry here. I cut directly off of this point. My RR, my profits would have been massive, so I did not really care about refining and all of that. I entered directly off of here. Why? This key level did what sponsored price action before I got disrespected. So I just assumed that this would be my entry. I took this as my entry. It did trigger me sharp. Fumbled the numbers or the position too, and then it did tap me. But yes, this is what I had. I was planning to sell from here to here first, here to here second, and here to here last. So I just had my TP here, then I'll be taking partials here, here, and here. That was my idea. But as you can see, price came, ended up giving what a break to the upside again, straight to myself. Did not waste too much time. So let's go daily. So as you can see, we had bearish closure. That was what gave me more confidence in that particular setup. We saw this low. I was expecting us to go to here. swept this high, go to the low, and all of that. You know most of this stuff. So we hit stop loss on this position. Once I hit stop loss, that is not based on me following my system. What I do is I sit out the rest of the day. Most times I sit out the rest of the day and watch it just play out. If my bias was wrong, it means I have to wait for market to completely flip before I enter. And after hitting stop loss twice on the same pair, remember I was selling, I hit stop loss. I was buying, I hit another stop loss. So what a day on Usdchf for me. So let me hide this. I hope I hit the other one so that I will do the complete estimate of all of them. Long position. Yes, I have that one already marked. Good. So I waited for the daily to close, and as you can see, daily close bullish. We had a bullish closure on daily here. So I was looking to buy. Now I was looking to buy again. Where was I looking to buy to? I was looking to buy to this key level here. This was my target. Now, bullish closure. H4, did we get a break to the upside? Yes, we had a break to the upside here. I had a break to the upside here. So I was looking to still buy this. Waited for Asia to close. Where was Asia? 1, 1, 2. So now I actually want to trade this thing. I want to buy this thing. So I need a range. M30 or H1. I skip H1 most times because H1 does not give me too much information to use. So I don't stick to M30. Then M30 will definitely give me something clean. So this was the range I found. Sake of this liquidity, break up this structure, and we had this pullback that formed around here. This pullback during Asia session. So I was taking this as my liquidity. And my entry then will become key level on the higher time frame. So you can start juggling H1, H2, M30, whichever it is you desire. And this was the key level that came to mind. Why? This key level sponsored several price action, so it was my entry. This was my entry here. My stop loss was below. Okay. My take profit was this high. I said if price gets to this point, I'll take partials because this is 3R and this is external range. Then this is where I would hold on. But then, as you can see, huge stop loss just melted. I think this is where everything started crashing for Usdchf on my end. But now we had this, after this massive liquidation here, I did not want to start trading this again. Just had to wait for the daily to close. When daily closes, it gives you more information about what's happening, and then you can make educated decisions. So as you can see here, we then closed bearish. So seems like price did not intend on buying to the high. So let's see what H4 has for us. Did H4 give us a break to the downside to validate the structure? Yes, we got that structure from here. Break to the downside happened here. Check your line charts. See. So now, what do we do now? We start selling again. The cycle of life. We want to sell. Where do we want to sell from? Let's wait for Asia to close first. Asia will decide that for us. So 1, 2. So now we have Asia closed. One thing that stands out is what? Imbalance. This huge imbalance here stands out. So I'm looking for an entry within this point. If there's liquidity, good and fine. If there's no liquidity, then I have to make judgments call. Either I enter risk entry or I enter what? Confirmation entry. And as you can see, this is what I took as my liquidity this week here. I took this as my liquidity. I use this level. Why did I use this level? If I would have taken this as a sweep, but it did not break anything here. So this is not yet a range. This is the range. Sweep of liquidity, break of structure. I took this as what? Liquidity waiting for price to sweep it. Okay, good. So I had my entry here, roughly around this point, because price had used this key level. Don't worry, when I say price has used this key level, there's no dip. It's not one dip Sensei, Mr. Miyagi, Nolly. So I just see price use this here several times. That's my entry. If I want to refine, I refine to this point here. This is what everybody would have taken as their what? As their liquidity. This is what everybody would have taken as their liquidity here. But when I refine to anything that looks like an outstanding wick within that liquidity. That becomes my refinement. So if I were to sell this thing directly from liquidity, what would I have done? This liquidity here that I have refined to is what is my direct entry. I'm showing this I'm not telling you that this is a valid setup that I would enter. I'm making this clear as a lesson on how I refine. Enter from here, TP, external range, whatever. But the main thing is that this is what everybody will mark out as what? As liquidity. But what is the closest outstanding wick to that liquidity? This is it. This is where I would use as my liquidity and my entry. I'm not looking for any key level when I have something like this, because I have refined how many pips? A lot of pips. I've refined from here to here. This is already too much. So I just enter aggressively from that point or use that point for confirmation. But yeah, saying this was my entry. My stop loss was here. Because I did not think price would come this high. And there was absolutely nothing here. There was no need for price to go that high. And this time, my take profit was this liquidity here. But you can also see, boom, stop loss. No mercy. There was no mercy with this one. It just went pipe straight to stop loss. So for this particular day again, I just left it. I did not trade again. I think I had it set up on EU and GU, so just leave it be. Should do what it wants to do. So next day, yeah, we had bearish closure again. More reason to sell. Price has not changed its intent. It still wants to sell. So what do? We still try. We still try to sell. We still try to sell until it tells us no longer wants to sell. So let's walk through this price action as fast as possible. So now this is where Asia closed. After Asia, first candle, second candle. That's all that I need for my Asia. Now I have this setup. Where do I want to enter off of? Big liquidity here, big imbalance here. Looking at me. So I want to see if there's anything on the lower time frame that fits this particular setup for me to enter. Now we have one liquidity here. I hope I'm clear. We have one liquidity here looking at us. And what is the liquidity? It is the Asian high. Asian what? We have the Asian high. But I would also refine this to liquidity. Why not? I'll take this up as my liquidity, because the same way I refine for the other place, this is how I refine to this other place until proven otherwise. And what would prove that otherwise? A range. If that candle can be the cause of a range, then I am 100% proved otherwise, and I will happily enter from whatever it is not in that side. But as you can see, we call this a sweep of liquidity, but there was no break of structure. So if I were to enter from, this is where I had my first limit here. Same thing, just place my stop loss at place where I did not expect price to get to, like this week here. And my target again was this low. But as you can see, price never got to this point. But this is the interesting thing that happened. When price did not get to that point, I did not just relent or say, oh, price has to get to that point, or whatever. I looked for another logic. What happened here? Price swept Asian high. After sweeping that high, what did he do? He broke this structure to the downside. Hold on. Why is my here? He broke structure to the downside. He swept Asian high, broke structure to the downside. That was basically a range. That was the range that we've been. That's the range we said we needed, and the range has presented itself. So this was my entry for this particular day. Good. This was the entry for this particular day. So I had to delete that. Price did come to the imbalance, by the way. This was price mitigating the imbalance. But then we had sweep of the Asian high. Then we had break of structure. So for liquidity, we had break of structure here. Now that we've had this break of structure, here is our next entry. What could we play off with this? You notice we have our range already. Now, first thing that came to my mind, first thing that always comes to my mind is what? Liquidity. And what is my probable liquidity here? Can't see anything clearly on M30, so I go to M15. If I don't see anything like liquidity on M15, I will go to M5. If I don't see anything like liquidity on N5, I promise you I will go to M1. From my since the liquidity I'm looking for not structure, I will go as low as possible. Here we did not have anything at called. We did not have anything at call liquidity, so I stay with it. I move lower towards N5. So sometimes when I send people my chart and it's M5, they're like, oh, I trade M5. No, this is what I do. Go lower, trying to find additional structure to validate my idea. Coming here, there's okay, as I was saying, there's more structure on M5 to validate my idea. Now I can start looking at maybe this is liquidity. All this accumulation. Maybe this is also what? Maybe this is also liquidity. But where's my invalidation? I know that my invalidation is here. So I want to pick something that will at least give me a chance to put my invalidation either above this or very, very close to it. This is the logic behind the particular entry I had here. So I marked this on M1. I marked both of this. And then I went to look for an entry on time frame higher, just in 15. When I came back, I saw that this was a single candle, which made it very, very interesting. And then we had what? This here. So when I had this, I checked the line chart. If you notice, this is a QM, proper QM. Left shoulder, this was our head, and then this was our maximum pain level. This here was our maximum pain level. My entry was directly off it. Yeah. Validation, close. I do not always break even, so I'm shielded. When I break even, I make sure that more structure has formed. So let me clear that up. When we have something like this, I have this and I enter off of here, and price begins to move. I wait for it to do what? Break the structure first before I break even. If price comes here, expect it to get to this point and what? Then continue moving. I don't just see something like this. Price is coming, has not taken out this thing, it's coming back and I break even. No, I do not do that. I make sure that my break even are very, very structured. If it takes me out, good and fine. I will not be happy with the loss, for I know I followed my system. So I entered here, take profit here. This was a 6-hour trade. All right. So after that, I was very much done for the day. I did not have any business to chat again. So next up, next day here, another bullish closure. Seems like we want to sell, so I'll just keep selling to lose until proven otherwise. So as you can see, daily closure as bearish. We had break to downside as bearish. Let's wait for Asia to close. 1, 2. Now this is something that has happened. Price has now expanded during Asia. Price expands like this during Asia. 9 out of 10 times you don't have any price action left. Price is not going to do any smooth talk during your London and New York. It's just probably going to be choppy. Either it's going to be choppy, it's going to be a reversal, or it's not going to move at all. One of them. One of these three things is definitely going to happen. So I was still very bearish. I did not really care. I still wanted to sell this thing, sell it to the very bottom. This had got into my profit and all. Remember, this was the target. This has always been the target. So let's see. Now we are back to where? We're back to London session after Asia. Now, what do we have? We need something interesting. We have our range. First thing that I always mark out, our range. We already have our targets. Now we need an entry. We need an entry. There is no clear liquidity here that could use this thing here. This is rubbish. When we have this imbalance here, there is no entry. So personally, I I waited for a confirmation entry before trying to sell this because of this thing here. I was waiting for price to engineer liquidity here, take it out, and then something like this. Get when I have setup like this is how that's the exact thing that I do. But if you try to play this aggressively, you would have hit stop loss, and it will not be your fault, Frank. Why? If price is going to reverse, if you are a continuation trader, you are going to hit stop loss. If price is going to reverse, if you are a continuation trader, 9 out of 10 times you are going to hit stop loss. It is normal. Don't stress. When price, as long as you are not trying to catch reversals, you hit stop loss when you are trying to trade continuation and price wants to reverse. So as I would approach this, looking for a confirmation or liquidity being created around here, that did not happen. Or let me say that happened. That's where here. I tell you that okay, this is liquidity. Where's my entry? I did not take an L here because of this thing. I woke up late. I'm very, very sincere. This other day here, I woke up because this day there was no trade, nothing here worth trading. But I woke up very, very late this other day. So I saw this thing happen. So I did not enter. That was my saving grace. Else, this is what I was looking at. This is what I would have done. This was Asian high. So now we are very, very close to this and we have liquidity close to it. I'll directly just sell it. Because when London opened or Frankfurt, when it was Frankfurt session, there was no tap into this place and there was no break. So just assume that will be liquidity. Aim to wherever, and as you can see, we hit stop loss on this particular trade. So same thing that I've been doing from the start. I did not change it. Kept repeating it over and over and over and over and over. So when you hit stop loss on this particular sell trade, you know that price does not want to sell any longer. Go to H4 and see what price wants to do. Does price want to buy? If price wants to buy, then you just go with the flow. And as you can see, we had a break to it. We had a break to the upside. When we had this break, I did not try buying this thing. I just let it be for that particular. The reason why I let it be was because of this. We had this order block here, which price could sell from, and buying from here to here. It looks good, but too much work. It's not worth 1% of my capital. It's not worth me risking 1% of my capital. So I just let it be. Wait there for the day to end. The day ends and continues bullish, then I'll buy. These are rules that I follow. So let's see. Good. So daily closed what? Daily then closed bullish. So I knew daily closed bullish. So now some have gotten break to the downside. Like this is a reversal before or a retracement before what? Before an expansion. So retracement. Where could price possibly go to from here? Number one, here. Very, very good place for price to stop. Number two, where? Here. Another good place for price to stop. But I would not expect price to get there, to be frank. Let's just sweep this and then go down. But let's see. We want to buy or buy to where? Buy to this level here. Sorry? Want to buy to this level. Not even there. That's too far. Want to buy to this level here. Because price has used this key level 1, 2 times. So we're buying, we want to buy to those levels there. So let's see H4. H4, did we have a break to the upside? This was the only break we had to the upside. And I don't like using this type of breaks. I want to see the break at least a day or two, or the A-shape that price breaks a day or 2 days before. I don't want to see like this far. This is way too far. This is like a week behind. So ideally, I just wait. I wait for the break to happen on our current time frame or our current day. Since we have already created we've created an A-shaped key level. So if price breaks this A-shaped key level, it shows me that we are serious about buying. So I wait. Candle number 1, candle number 2. This is the end of End of Asia. Get. So now we are in New York. We're in London, Frankfurt, London. So now having this on the chart, next thing I want to do is wait. Like I said, I will wait for this thing to happen, for this break to happen before I start considering anything on the chart. And as you can see, where is it? Hold on. Yes, good. Yes. can see I waited for this key level. I waited for a break to happen before I tried buying. Now, when this break happened, a lot of things went through a lot of people's mind in real time. I'll show you what a lot of people are thinking. So we had this break. Now we've gotten this break back. Where do we enter? As usual, we go to what time frame? M30 of each one to look for our range. Yep, we go to each one M30 to look for our range, and this was our range. Sweep of this liquidity, break of this structure. Now you might take this as what? This is a sweep of liquidity, isn't it? And this is a break of structure. But why is this not strong? This is not regarded as our range, as our ideal range, because it did not give us any liquidity that we could use apart from this Asian low. We had this Asian low here. This was our first liquidity, but price never took it. If price does not take your liquidity and it runs away, it will come back for that liquidity. Whether it's coming to take you out or whatever, it is still coming back for that liquidity. And when we had this break to the upside, some people were considering what this sweep of liquidity and this break of structure, all aligned and all of that. But knowing fully well that price has not taken this thing here, I did not try to buy from this level. I think this was last week, and I'm sure I dropped the setup on my journal, and then my entry was where QM. No brainer. This is left shoulder head. This is the maximum pain level. This is the entry. The maximum pain level, liquidity, whatever it is you want to call it. Entry was here. Support was here. First take profit could be here, and last one where this high, where we wanted to stop buying. But I just use this since the distance was not much. There's no need for me to over exhaust the setup itself. So this was entry number one. Now, if you had missed the original entry when price tapped, confirmation entry will always show up where lower time frame. No need to stress yourself. Check your lower time frame. You always see a confirmation entry, and the confirmation entry here was what? CRT. But sweep of this liquidity, sweep of this low, the high was standing. Where is your entry? No brainer. Your entry is this V shape that price created. Don't stress yourself about this one. Entry here, stop loss where? This low. But I placed it around this entry here. Because if price comes to this entry, just expected it to reverse. So roughly around this side, here or about. Yes. So this is how I came about with the 10R for this particular trade. And as you can see, it's going to take profit. So next day. Hold on a second. Let me hide the positions. Clear. Okay. So price has tapped this particular key level here. It did not reject from it significantly, so I'm expecting it to go to the next target, which is this one here. Yes, which is this one here. So we had daily closure to the bullish. H4 break was to the upside. And now time for our entry. But as you can see, price went to where it went to the target before it came back to our entry. I made this mistake. It did not occur to me. But look at what happened here. The expectation changed to be what? Since price had not gotten, this was our range. This was where I was using as a range. Since price had tapped this entry here, pushed up, we had this sweep here, and then this break of structure here. This was my liquidity. I think I shared this one, and my entry was around around this side. Can't really start going into the. You've seen me do the entry stuff a lot of times, so Just this time I was not aiming for this. I was aiming for this high for price commanding this thing here. But as you can see, price went to my take profit before it started coming down, and that will be my cue that this is invalidated since this is the first trouble area. But I did not do that time, as you can see. Stop loss. I hit stop loss here. This particular. So after this stop loss on the buy, it meant my buyers had failed. So wait for the day to close. On Friday, I did not trade. I just closed for the week there. But yeah, let's say Friday. Let's see. We now have a rejection here and a bearish closure. So if you were to trade this thing on this particular day, if you were to trade on Friday, this is how I would have approached it. We had this rejection here. We had bearish closure. As you can see, you did not hear me doing daily reject, daily H4 break, all of that. I just use closure straight away. Once price gets to a possible point of reversal, I use closures and I get out. So now we had daily closure bearish, also daily rejecting daily. H4 break was to be the downside. Now what do we need? We need range, we need liquidity, and we need entry. So candle number one, candle number two. So this is where we stop. And we are looking for an entry. So we go to look for a range from where? M30. Now, something good about M30 is we did get our range. Our range was quite clean. What was that range? Sweep of this liquidity here. Then we had a break of this structure here. Price came on to do what? To do this. Created all this liquidity, but this was during Asia. So it came and taps this here. During what? During Asia. This happened during Asia. Then price sold to the bottom. So if I were to enter this, genuinely speaking, I would have taken this as a sweep of liquidity, break of structure. I would have been stopped out on this trade. Okay, yeah, there's a chance that I would have been stopped out on this trade because this would be my entry. Hold on. This here would be my entry. Like imbalances, key levels that overlap imbalances, and all of that. Favorite thing. So this V-shaped key level here, got disrespected, will be my entry. Why? It also sponsored this sell, sponsored this buy here. So this will be my entry because a range formed here, and my stop loss would be this high here. Not that high. Honestly speaking, the stop loss would have been here. And I would have been taken out of this trade. Yes, I would have hit stop loss if I traded this on Friday, so good thing I did not trade it. So yeah, but looking at this from hindsight, if this had not been Asian high, because there was nothing else here to trade. We had the range, we had Asian high as liquidity, standard liquidity and all, but this particular thing did not leave anything above. There was no key level here I could use to enter, so I would have just taken this as a proper sweep of liquidity and break of structure range and entered off of it with this being internal liquidity. This is what I've done. So for the month of May, this is every single price action that I saw regarding for USDCHF. I hope you learned it enough regarding bias, entries, invalidation, and how to backtest all these things that we said we are going to talk about. This is just purely backtesting. I wanted to just stream my backtesting session live, so I would not have to do back and forth a little bit. Well, if you have any question, drop your questions in the your questions in the chat once the session is over, and I will definitely try my best to look at as much of them as well. I'll look at all of them, and I'll send you responses to all of us. So I'll upload the recording once it drops in my DM. I hope we all have a nice night. And I know this was a very, very long session. It's an entire month of price action, so I did not think it was going to be.
It was worth it.
Very, very So yeah, I hope